This year I shared more than 1,000 free day trading and swing trading signals for Forex, gold, silver, oil indexes, and crypto. The majority of the trading setups were based on classic price action chart patterns. And what I did throughout the year, I kept the record of each trading signal that I posted, noting the winners, the losers, and the entry reasons. In this video you will learn the winning rate of each chart pattern that I traded, and you will learn the most accurate and profitable chart patterns for trading. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. First, let me reveal the list of chart patterns that I traded this year. Double top and double bottom, head and shoulders pattern, cup and handle pattern, ascending, descending, and symmetrical triangles, bullish and bearish flags, rising and falling wedges, and the horizontal parallel channel. Trading for more than 9 years, these patterns showed the highest accuracy. And I did not trade every pattern. There were some specific criteria that I followed. Of course, I will share this criteria with you. Secondly, you can backtest the performance of each trading setup and of each chart pattern that I shared on my official TradingView page. TradingView does not allow removing the trading ideas once they are shared, so the results that you will see are real. That's my TradingView page, and you will find the link to that in the description to this video. All the signals that I shared this year are posted here, and you can backtest each and every setup by your own. You can open any trading setup and you can see its real performance and result. Cheaters, don't miss a big Christmas sale on everything. VIP signals, Trading Academy courses, and books on a huge discount. Visit my website for more info, the link in the description below. Moreover, you can apply the filter and you can make TradingView display only the ideas for a specific chart pattern. For example, if we click cup and handle, you will see only the trading ideas for cup and handle pattern. Thirdly, all the chart patterns that I traded were formed strictly on key daily supports and resistances. I never trade the patterns beyond key levels. For example, here's a free trading signal that I shared for gold. The trading signal is based on the inverted head and shoulders pattern that formed on an hourly time frame on a key daily horizontal support. That is a very important criteria. Please note that the chart patterns that are formed far from key supports and resistances will always have a lower winning rate. And that is a trading signal for Euro Aussie pair. I spotted a double top pattern on an hourly time frame, but the price also tested a significant daily resistance. That was a very important condition. And I applied the chart patterns primarily for day trading and swing trading. The time frames that I used were daily, 4-hour, 1-hour time frames. And scalping these chart patterns on lower time frames, the performance will be different. And the last thing that is so important to note is that the most accurate chart patterns should align with the market trend and should have the same bias. Look at this trading setup on Link coin. You can see that on an hourly time frame I spotted a bullish price action pattern, a falling wedge. On a daily time frame we see a test of a recently broken resistance that turned into support, but also we can see that the market trend is strongly bullish. So the pattern on an hourly time frame has the same bias as the market trend. The pattern indicates bullish continuation in a bullish trend. The price action patterns that indicate the price movement against the trend will always have the lower accuracy than the chart patterns that are the trend following ones. It means that to achieve the highest winning rate with chart patterns trading, you should strictly apply the trend following strategy. Following all these criteria, here are the winning rates of the chart patterns that I traded this year. Double top and double bottom get 66% winning rate. Trading double tops and double bottoms, I was always waiting for a breakout of the neckline of the pattern as the confirmation. For example, here on pound dollar pair, after a test of a key daily support, the price formed a double bottom. The formation of the pattern itself is not the signal, but the breakout of its neckline gives us the valid strong signal. Head and shoulders pattern and its inverted version get 69% win rate. Treating head and shoulders pattern, again, the formation of the pattern is not the signal. Our signal is the breakout of the neckline. With the head and shoulders pattern, the price should violate its neckline and close below that. That is our strong bearish signal. Only then we can anticipate a bearish continuation. Take a look at my trading setup on gold. We can see a strong long-term bullish trend on the market and a test of a key daily horizontal support after a pullback. On that support, we see a completed inverted head and shoulders pattern. But the pattern is not the signal. I clearly indicate that we will be bullish on the market, we will anticipate growth only after a breakout of its neckline. Cup and handle pattern and its inverted version had 67% accuracy this year. That's how I treated the cup and handle pattern. I was always waiting for a breakout of the neckline, and only after the market closes above the neckline of the cup and handle pattern, only then I was looking for buying the market. Bullish and bearish flags got 62% accuracy. Treating the flag formation, the signal is always the breakout of the trend line of the flag. If we see a bullish flag, the price should strictly violate the resistance of the flag and close above that. Only then we can anticipate growth. If we see a bearish flag pattern, then we should look for a breakout of its support line. That will be our strong bearish signal. Rising and falling wedges were accurate in 64% of the trading setups. Treating the wedges, we always pay attention to the boundaries of the wedge. If we see a falling wedge pattern, the price should break and close above the upper boundary of the wedge, its resistance line, to confirm a bullish movement. While if we see a rising wedge, the price should violate its support line to confirm a bearish movement. Horizontal channel, the range achieves 68% winning rate. That's the example of the horizontal range pattern on euro-dollar pair. By the range, I mean the horizontal parallel channel where the market consolidates. And you can see that euro-dollar was trading in a strong bearish trend, violated the key resistance, then retested that and started to consolidate. The signal that I was looking for to confirm a bearish continuation was the breakout of the support of the range. The ascending and descending triangles gave correct signals in 67% of the trades. The most important element in ascending and descending triangle patterns is its horizontal neckline. If we see the ascending triangle formation, our signal will be the breakout of that and the candle close above. It will confirm the initiation of a strong bullish movement. Symmetrical triangle got 61% winning chance. And when we see a symmetrical triangle, main focus is on the trend lines of the pattern. If the price violates the resistance line, the falling resistance of the triangle, it is a bullish signal, while the violation of the support of the triangle is a strong bearish signal. Please note that the best and the most accurate trading setups were based on a combination of multiple chart patterns. It is a situation when the market forms two or even more same bias chart patterns. Such setups have a winning chance above 70%. Let's examine this trading setup. You can see that we have a test of a key daily horizontal structure support. On an hourly time frame, after the test, the market started to consolidate and formed the range. And also we see a very nice falling wedge pattern. That is a perfect example of a trading setup that combines multiple chart patterns. Not only the price formed the horizontal range, but also the price formed a falling wedge, and the bullish breakout of the resistance of the wedge and of the neckline of the range will give very strong bullish signal. This setup that achieved almost 83% winning rate this year is based on a combination of a falling wedge pattern and a cup and handle pattern within. Let's examine this trading setup. After a test of a key daily horizontal support, the price violated the resistance of the falling wedge pattern, giving a strong bullish signal. But if we analyze the price action within the boundaries of the wedge, we can also spot a tiny cup and handle pattern here. And with the breakout of the resistance of the wedge, the price also violated the neckline of the cup and handle pattern, giving a very accurate bullish trading signal. Always record the results and the entry criteria of your trades. It will help you to identify the most efficient entry signals and the worst ones. I hope that my observations will help you in the next trading year. Let me know traders in the comment section if you have any questions. Also traders, don't miss a big Christmas sale on everything. Trading Academy, VIP signals, books and courses on a huge discount. For more info, visit my website, the link in the description below. Also traders, please watch my other videos.